Physical systems often seek equilibrium through oscillation. A pendulum at its outer apex possesses maximum potential energy, which is converted back into kinetic energy as it sweeps towards its center axis. Understanding this return to a baseline is the first step in analyzing cyclical price movement. Most trading strategies prioritize vertical expansion, the moments where price is rapidly moving out of a consolidation zone. These high-velocity waves are easy to see, making them the primary focus for the majority of manual operators. However, as an asset reaches the outer boundaries of its expected volatility, velocity begins to decay. The movement becomes a slow, grinding compression. Because the visual excitement of the breakout has faded, most observers lose interest and look elsewhere for momentum. This deceleration is actually a structural requirement for a high-probability mean reversion play.
The slowing price action at the extremes is where the most significant potential energy is stored. Kinetic energy storage occurs when price grinds against volatility boundaries. During this phase, algorithms systematically sweep micro-liquidity, and large-scale passive limit orders begin to stack, creating a ceiling or floor that halts further expansion. Pressing against a standard deviation threshold mirrors a massive industrial clock spring. Progress is slow, but the force is immense. Though price barely moves, structural pressure increases. The order book saturates, setting the stage for an immediate balancing operation. When this compression finally breaks, the return to the mean typically happens in a fraction of the time it took to build the tension. To track this, we apply the thermodynamic equilibrium index. Moving from chasing exhausted momentum to anticipating these reversion plays requires a shift from observing velocity to measuring probability physics. The thermodynamic equilibrium index provides a framework for these operations. It categorizes market conditions into 4 structural paths. The first row identifies the slow buildup. The tactical law is to treat maxed potential energy as an imminent signal for a reversal. Once the tension at the extreme reaches a limit, price follows a specific structural path vector. In a band-to-band rotation, price tags one volatility envelope, exhausts its liquidity, and rotates across the entire engine block. Range protocol applies. The upper band serves as the short entry zone, while the lower band acts as the buy target. The second vector is the extreme to mean refuel. This occurs when a vertical price spike reaches a 3 sigma limit and becomes completely detached from its baseline. At this extreme, aggressive market orders typically stop. Reversion algorithms then take over, using the resulting liquidity vacuum to rebalance the delta inventory back at the mean. These vectors demonstrate that mean reversion follows repeatable pathways rather than random fluctuations. Every reversion play eventually meets a crossroads at the midline, often represented by a 15-minute 21 EMA or an hourly 8 EMA. As price heavily impacts this baseline, the market produces a definitive two-way signal, forcing a strict test of the current structural integrity. The final 2 rows of our index define the binary outcomes of this test. There are only 2 mechanical possibilities. At this exact junction, the data is black and white. The asset either breaks or holds. Scenario A is the rollover. Here the price drives into the mean. The sell programs overwhelm the midline, printing a candlestick completely below the floor, forcing the moving average slope to flip downward. In this rollover, institutional bids have been pulled from the book. The structural floor has buckled, and sell programs now maintain strict directional control. This explicitly signals a shift in posture. The previous mean support has now been converted into an active supply ceiling. Scenario B is the continuation, or the touch and go. In this instance, institutional managers use the mean as a wholesale entry point. They step back into the order book to accumulate size. The visual evidence of this is the rejection wick. Price taps the baseline, but the selling pressure is immediately absorbed. These passive limit orders refuel the primary trend, preparing the engine for a secondary impulse wave. The precise operational law here is to enter in the direction of the original trend, utilizing the absorption at the mean as the entry trigger. Risk is managed with an invalidation stop placed just below the rejection wick. This ensures capital is protected if the structural mean fails to hold. By waiting for the midline to provide this exact binary feedback, you completely eliminate the need to guess where a retracement might end. To see how these rules work in practice, we can apply the index to a complete market cycle. The cycle starts with kinetic buildup as price compresses against the upper volatility band, storing potential energy.
The subsequent snap triggers an extreme to mean refuel, with price sliding through the vacuum back to the baseline anchor. At the midline, we look for the rejection wick. This confirms institutional accumulation and indicates that the mean is holding. This hold results in a secondary impulse wave, launching the asset into the open space above the previous high. The thermodynamic equilibrium index maps this sequence from the initial tension to the final execution, providing a clear path through each phase. Quantitative funds often dominate mean reversion because they adhere to strict execution parameters rather than chasing price in uncalibrated spaces. Their protocol involves waiting for tension at the extremes, tracking the slide to the baseline, and acting only when the midline provides definitive feedback. This approach lets the structural data, the rollover or continuation signals, determine the tactical posture. By focusing on these specific mechanical triggers, an operator can avoid the errors associated with subjective or emotional entries in the middle of a range. Mastering kinetic energy storage and the midline decision matrix aligns your operations with the observed behavior of institutional order flow.